Good afternoon, everyone. Welcome to What You Need to Know About COVID-19 SBA Loans. We're excited to have you all here. Before we get started, we'd like to just review a few housekeeping items. My name is Stacy Rogers, the Director of Learning and Development here at Cohen, and I will be your moderator today. Your WebEx host for today's webinar is Alex Chapik. If you have any questions or challenges throughout the webinar, please send a message using the chat feature in your WebEx window and send your message to the host only. This webinar is eligible for CPE or continuing professional education. In order to earn CPE credit today, you will need to be on the webinar for at least 50 minutes, and you must answer 3 out of the 4 polling questions during the webinar to receive full credit. These will appear on the right-hand side of your WebEx panel throughout the webinar. You will have 3 minutes to select your answer once the poll is opened. Please ensure you hit submit once you have answered the question, and then following the webinar, we will provide a survey to complete as well. We have reached out to gather some of your questions ahead of the webinar, but please submit any additional questions through the Q&A feature in WebEx. We will try to answer as many questions as possible, and we will also be providing additional thought leadership information following the program, and we will work to answer any additional questions that we may not get to today. We're expecting over 1,000 people to join us today, so if you should have any trouble with the connection, please know that this webinar will also be recorded and made available via our website as soon as possible. We will now turn it over to Adam Hill to introduce our speakers and our panelists.
Good afternoon. Thank you for taking the time today to call in. My name is Adam Hill. I'm the partner in charge of our real estate group here at Cohen & Company and have been with the firm just over 20 years. Before I introduce our first speaker, I wanted to give some commentary on the current market conditions. Information's been flowing fast and the facts have been changing rapidly over these last 2 weeks. I've heard a lot of misinformation coming out in the news, and hopefully today we can give you some clarity on 2 specific programs. The SBA's Economic Injury Disaster Loan Program, 7B2, and the expansion of the SBA's 7A program that Congress has chosen to use as its method to get cash to businesses as fast as possible. And good news for those of you who haven't checked the news in the last 30 minutes, the House has passed the CARES Act, and it's going to the President's desk for signature. There are a few things that I wanted to talk about that we know for sure right now, right? In these uncertain times, there's a few things that we know that's happening to almost every business out there. One is that businesses are struggling to figure out what their cash flow is going to be right now, in the next few weeks, and the next few months. Number 2, tough decisions have been made or are being contemplated based on the current economic shutdown. Help is on the way. Timing is the issue, and we will discuss that today. And then 4, just to throw this out there, if we get through this webinar today without any technical issues, dogs barking, kids screaming, it'll probably be the first one this week in the country to do so. So bear with us. We're all working remotely, and the capacity on the technology side from a national level has had issues throughout the week. So to reiterate, we are recording this session. It'll be emailed out to everybody with a link to the PowerPoint as well. Hopefully later today or tomorrow. Okay, let's get started. We have a few thousand people on the phone, about 35 states. So for those of you who do not know Congressman Anthony Gonzalez, he grew up in Northeast Ohio, won 2 Big Ten championships at The Ohio State University, played 5 years in the NFL, earned an MBA from Stanford University, and is currently serving his first term in Congress representing Ohio's 16th Congressional District. He currently sits on the House Committees on Finance Service and Science, Space, and Technology. Please keep in mind that for purposes of this discussion, the Congressman's comments are based on the information at this time. Please welcome Congressman Anthony Gonzalez.
So thank you, everybody. I really appreciate the opportunity to visit with you here. Like you said, about 30 minutes off the House floor. passing the CARES Act. I want to start before I kind of get into my remarks, and I just want to thank Cohen and Company. I've been on emails and calls with Randy Myroff and the entire team throughout this entire negotiation process. It is not an exaggeration to say that a lot of what is in this bill, especially with respect to the tax provisions and moving the filing deadlines and the payment deadlines of the IRS, are a direct result of those conversations. We were passing that information up to the senators as they were negotiating. I know he was working with Senator Portman as well. And we were also feeding direct lines into Treasury to make sure that as we put together what is ultimately the largest stimulus package in the history of our country, as we put that together, we wanted to make sure that we had the right insight and the right guidance. And so a big thank you to Cohen on that. All the good provisions they can take credit for. All the bad ones, please feel free to shoot my way. I will take the responsibility. In any event, the way that I think about sort of the situation that we're in today is we have an obvious health crisis, which has caused a hopefully temporary economic crisis. And the goal, from my standpoint as somebody on the Financial Services Committee, is to make sure it doesn't turn into a full-on financial crisis. And so how do you do that? Number one, you have to take care of the health side. All bets are off until we take care of the health. If we get this virus under control, we get the curve down, we start to see recoveries, we develop therapeutics, we get testing, we get supplies, all those things that you need to do, we need to make sure that we're on full blast there. And we are, and I believe that that will overcome it. It'll be frustrating, it'll be difficult. We're nowhere close to being out of the woods, but we know that we have to. And so part of this bill devotes resources and supplies in those areas. So that's on the health side. I won't get into that much. On the business side, on the economic side, we're facing likely the biggest liquidity crunch maybe in the history of our country, where we've literally just turned off the economy. And not only have we turned off the economy, but the entire world, the entire Northern Hemisphere, has turned off its economies. And so these economic sudden stops have forced everybody into a cash crunch. And so as we put together the CARES Act and the different packages, the goal was to make sure that we injected liquidity into the economic system, into the financial markets, but also into the economy, the real economy, so that we basically can just weather this pause. There's nothing like it in the history of the country, but I think we've done a decent job. And I'll say this: we know we're not done. We know that there's going to be more to come, but we've got a good start. So on the SBA side, and I'll let Cohen get into the nitty gritty, but on the SBA side, the goal was, hey, look, we know that our small businesses, by and large, do not have the capital cushions to weather a 2 or 4 month storm where they just have no revenue coming in the door. And so the biggest component of this is the forgivable loan program, which would basically allow small businesses to draw up to $10 million directly from their banks, backstopped by the SBA, where these will be forgivable loans, provided you keep employment steady and you're using it for employment, rent, utilities, those sorts of things. So sort of your operating expenses. I think this is an amazing program. We have to make sure it gets administered correctly and efficiently, but the concept behind it, I believe, is very sound. And so that's one area where we're going to drive liquidity into our small businesses. Another place to drive liquidity is on the unemployment side, where we've basically expanded unemployment and increased the benefit. We can talk about that. I think there's a weakness there as well, but the general concept is sound of expanding it. We have 3.5 million people become unemployed last week. Not the kind of record you want to set, but we did. And so we want to make sure that we're taking care of folks who are on unemployment, and then have a primed economy for when they come back. The rebate checks, these are the $1,200 or $2,400 one-time payments that are going to go to individuals or joint filers, and then an additional $500 for every child. Those start to phase out after $75,000 in adjusted gross income, or $150,000 for joint filers. But again, more liquidity into the system. And then the tax provisions. refundable payroll tax credit for 50% of wages paid by employers to employees during the COVID-19 crisis. Credit is available to employers whose 1, operations were fully or partially suspended as a result of the virus, or 2, gross receipts declined by more than 50% when compared to the same quarter in the prior year. And additionally, there's a delay payment of employer payroll taxes. Allows employers and self-employed individuals to defer payment of the employer share of the Social Security tax they otherwise are responsible for paying to the federal government with respect to their employees. The provision requires that deferred employment tax be paid over the following 2 years, with half of the amount required to be paid by December 31st, 2021, and the other half by December 31st, 2022. And then, that's in terms of the economy, that's sort of the big liquidity pieces. And then there's obviously a massive liquidity feature at the Federal Reserve, which I think they've been using quite well. The last thing I'll say before I kind of turn it over again is this. Look, we put this bill together very, very quickly, and probably the fastest we've put a bill of this size together ever. And we know for sure that we've solved some problems, but we also know we haven't solved all problems. And we know that the puzzle pieces still don't fit perfectly together. We know that. And so we know that there's still work to be done. And we're going to continue to do that work and make sure we get it right and get through this together. But the most powerful component of what's happened, in my opinion, the most powerful component is that in what is arguably the most divided Congress we've had since maybe the Civil War, coming fresh off of impeachment, which I can tell you from going through that was the most divisive thing I've ever been a part of. All that bad will, all that bad stuff that's been happening in our Congress and in our politics that frustrates everybody on this call and frustrates me as an American. We put all of that aside and got this done very quickly. And when you look at the response at the federal level, where we have been stuck in the mud for a long time, I think it's an incredibly powerful signal. So the bill's not perfect, and we know we have to fix parts of it, and we will. But I hope that the takeaway for those on this call and for the country and our region is they finally put partisanship aside for a minute and focused on solving the crisis. And I believe, and I hope, and I'll do everything in my power to make sure this is the case, that we'll continue to do that as long as the crisis persists. If we do that, I think we'll be able to plug the liquidity holes, we'll be able to get the puzzle pieces to fit, we'll be able to make this doable for the country, because it's incredibly disruptive to everybody's life. But I'm confident, based on what we've just done today and the goodwill we're seeing at the administration, that we're going to move this thing forward and we're going to continue to do it. So with that, I want to thank you all for having me on this call. Thank you for all the work that Cohen did to make this bill better, and for all their continued leadership in our community. And with that, I will yield back, and I'll stay on for questions as well, should there be any.
Thank you, Congressman, for your time today and all the effort you put into to make this happen. We're going to move on to Dave Sobachan to give an overview of the 2 SBA programs. Please remember that the expanded 7A program is still pending signature, but at this point, since the House just passed it, we should consider this law. Dave is a tax partner based out of our Cleveland office. He's got 20 years of experience dealing with business owners in almost every industry. He was part of the team, along with our technical director and tax partner, Tony Bacall, and a handful of others that have probably read over 10 drafts of this legislation over the past week. Dave?
Thanks, Adam. So I am going to power through these slides to try to preserve as much of the Q&A time as we can, because I think there'll be great dialogue there. Next slide. So the first program I'm going to go over is the SBA Economic Injury Disaster Loan Program. It's also called the 7B2 program, and then we've heard to referred to as just as a disaster loan program as well. So this program is designed to provide working capital to applicants who are impacted by the coronavirus. If the applicant has access to credit elsewhere, that will be taken into account by the SBA. The actual amount of the loan is determined or is limited to the economic injury determined by the SBA, less business interruption insurance, and other recoveries up to the administrative lending limit. So we have been telling clients that if the business has access to credit elsewhere, that will likely count against you. The application is underwritten based upon the need and ability to repay and either secured personally or guaranteed. So let's talk about who's eligible. It's a small business, which will define a small agricultural cooperative, small aquacultural businesses, and private nonprofit businesses. In determining whether a business is a small business, the SBA has specific size standards that are actually broken out by NAICS code, and they look at revenue, employee count, and you can actually access the size standards on the SBA website, and they actually have some pretty helpful tools where you can actually just plug in your sales and your employees, and it will actually tell you if you're a small business or not. For businesses that don't meet the revenue or employee count test, there's actually an alternate test that states if the applicant's tangible net worth doesn't exceed $15 million and the applicant and affiliate's net income after taxes for the two full fiscal years before the application date is less than $5 million, then the business would be considered a small business. And for flow-through entities, that after-tax calculation takes into account, you take into account like the top federal marginal rate to calculate your tax liability on your flow-through income to get your after-tax number. So in terms of how much you can borrow, it's up to $2 million. There is a collateral requirement for EIDL loans above $25,000. Typically, real estate is preferred, and I guess to note, the lack of collateral, it doesn't actually equal an immediate rejection. Next slide. So the main takeaways on this slide is just that this loan program is processed through the SBA website. We have heard of significant delays in that website, and I believe last week SBA partnered with Microsoft to try to expand the bandwidth. Obviously, that website probably isn't, wasn't set up or created to withstand the amount of hits it's currently taken. The other things to note is that the applicants do not go through a bank. There's no cost to apply, and there's actually no obligation to take the loan if it's offered. We've listed the link to the website on the slide, and then there's just some filing requirements also on this slide to just help prepare you for what you're going to be asked for. So I'm going to spend a quick minute on the SBA affiliation rules because it's very important for this program and maybe important for the 7(a) loan program. What the affiliation rules are designed to do is for owners of multiple businesses or businesses that own multiple subsidiary entities, it's designed to account for the fact if that business or those owners have control over multiple businesses in determining whether a business is a small business or not. So the things that they typically look at is controlling interest or 50% or more of voting stock. If you have control of less than 50% voting stock, but you technically either have voting control or common management, that's also looked at. Members of a family are deemed to be looked at as one owner for the purposes of that 50% ownership test. And in instances where there's stock options, convertible securities, and agreements to merge, the SBA considers those in effect, so that ownership would be deemed owned by the person who has those stock options. And then for joint ventures, parties to a joint venture are affiliates if any one of them seeks SBA financial assistance for the use in connection with the joint venture. There's a couple of exceptions to the affiliate rules, one of which is a business that's wholly owned or substantially owned by investment companies or development companies, but it's only those that are licensed or qualified under the Small Business Investment Act of 1958. Those are SBICs. The other exception is a business that leases employees from a business primarily engaged in leasing employees to other businesses. So that will throw you out of the affiliation rules as well. Next slide. So now we're going to talk about the SBA 7A expanded program. So this is the 7A program is basically the bread and butter lending program for the SBA itself. What's currently in the CARES Act is an expansion of that program. Let's talk, and this is the one that I think people have heard forgivable loan attached to, and we'll kind of talk through that. But who's eligible? It's small businesses, any business, and we'll get into where the situation where any business would qualify, nonprofit organizations, excluding those receiving Medicaid expenditures, veterans organizations, sole proprietors, independent contractors, and self-employed individuals. In terms of how much you can borrow, and I guess to take a step back, in terms of any business, it would be any business that has less than 500 employees, or if in certain instances there are carve-outs for specific businesses that have the NAICS code of 72. Those are hospitality, bars, and restaurants. And there's a specific carve-out for those businesses where they have less than 500 people per physical location. And there's a specific carve-out for the affiliation rules for those businesses with that NAICS code beginning with 72. So it was really designed to allow hospitality, bars, and restaurants and others in that NAICS code that are particularly being harmed as we are all under generally stay orders to be able to take advantage of this program. So how much can you borrow? It's actually a calculation. It's the lesser of 2.5 times average monthly payroll costs for the year before the loan is made, and then there's a addition to that, which is any outstanding IEDL loan, the Economic Disaster Loan Recovery Loan, balance made after January 31st, 2020 and refinanced under this 7A program. So if you find yourself with an approved EIDL loan, there's a possibility that if this program would result in a better result for you, that you could actually refinance that loan into this specific program. And then there's the SBA Express loans. They've increased the limit that was previously at $350,000 all the way up to $1 million. So in terms of allowable uses, you can use this for employee salaries, paid sick or medical leave, insurance premiums, payments of interest on mortgage obligations, rent, and utility payments. Next slide. So there's definitions in terms of what a covered mortgage obligation, rent obligation, and utility payments. Those are typically a mortgage that was in place before February 15, 2020. Same thing with rent. It would be a lease in place prior to February 15, 2020. And then utility payments would fall under that same rule. Next slide. So the loan itself has an interest rate not to exceed 4%. The duration of the loan, so if any amount of the loan is not forgiven, it turns into a term loan, a 10-year term loan that starts as of the date the borrower applies for loan forgiveness. There's no payment penalties, and complete payment deferment for at least 6 months and not more than a year. The borrower and lender fees are waived, and during the covered period, the requirement, and the covered period is February 15th through June 30th. The requirement that a small business concern is unable to obtain credit elsewhere doesn't apply to this loan. So that's a very different differentiator from the 7B2 loan, where if there was credit available elsewhere, that would be a bad fact in applying for that loan. In this loan program, even if you had access to credit elsewhere, that doesn't count against you. Also, there's no collateral or personal guarantee requirements under this program. There is an exclusion for borrowers that have received a 7B2 loan beginning on January 31st, 2020 and ending on the date the covered loans are available, but only if the purposes, if you are using that program effectively for the same use as this program. But there's an exception to that rule if you applied for the 7B2 loan and you used that loan for different expenditures than this specific program. So that provision was really put in there to not harm someone who has already applied for a 7B2 loan. After the date the covered loans are available, you'll have to pick the program you want to fall under, whether it's 7B2 or 7A. Next slide. So in determining whether you're eligible for loan forgiveness, you have to look at the amount spent during an 8-week period after the origination date of the loan. Payroll costs are an eligible source for that, but not amounts exceeding $100,000. Interest payments on mortgage debt, rent, and utilities, like we said before. There's limits on the amount of forgiveness. You're not going to get a debt forgiven beyond the actual principal amount. And there's a reduction of the amount of forgiveness if your employee count by number of employees decreases, or if the amount of the wages decreases more than 25%. And there's a specific testing range for those two rules. There is a notable rehire exception that is, I think, a fantastic part of this legislation, because obviously business owners are making decisions now. So if a reduction occurred, whether that's in number of employees or in salary, between February 15, 2020 and 30 days after the enactment of this bill, and the reduction is cured by June 30th, that won't count against you in determining the amount of your loan forgiveness. Next slide. So included versus excluded payroll costs, I'm just going to let you read that yourself. There's a pretty long delineation of expenses that actually are included in the amount of a payroll cost. Next slide. And in terms of where to apply, we have a link as an online referral tool for eligible SBA banks, as well as some of the filing requirements that you're going to need, most notably like payroll records and things like that to validate your payroll amount. Next slide. We kind of covered this before. The affiliation rules are waived for those businesses with less than 500 employees on the date of dispersal and assigned that NAICS 72 code, franchise businesses, and business concerns that receive financial assistance from SBICs, basically. Next slide. And with that, we will turn it over to the panel.
Thanks, Dave. So today on the panel, we have Jeff Banks from Huntington Bank. He's an SBA specialist and has been very active in the SBA world for a long time. We got Ray Graves, lead lender relations from the Cleveland District Office of the SBA, and Adam Whitaker, Vice President at First National Bank, and also very involved in SBA loans. Adam's out of Pittsburgh. Jeff and Ray are out of Cleveland. So let's just jump into the first question. I think what everybody's wondering right now. The number one question on everybody's minds of every small business owner is, when can I start applying for the 7A relief? I know the administrator will need to give guidance, but if you could comment on what you know today, understanding that may change, regarding timing of starting to receive the applications. Adam, why don't you take that first?
Sure. Thanks, Adam. So based upon what we know within the legislation is the administrator will have 30 days to provide its guidance to banks to which they will be able to implement the delivery of these funds. I believe that there's a strong likelihood that the administrator will try to get that guidance out to the institutions themselves much sooner than 30 days, but that is technically what the law says right now. Above and beyond that, the banks themselves will need to take some time to digest what that final guidance is. It could be, a day or several days, but there will also be some, level of time that the institutions themselves are going to need to be able to implement the process appropriately. So, things that borrowers can start doing is preparing the payroll logs to the extent of what you talked about previous to this, Dave, but understand that until we have some more firm guidance from the administrator, it'll be a few weeks' time before we can actually start taking applications.
Okay. Thank you. Jeff, do you have anything to add there?
Yes. First of all, I'd like to thank Adam and Colin for putting this together, number one. But obviously we know that this is a very fluid situation, constantly changing, lots of interpretations. What I do know is that, Huntington Banking, we are the number one SBA lender in the country. We are actively involved in kind of putting this together. And I think the SBA is going to expect us to kind of lead in the Midwest, and I think we're going to do that. What we do know, or what we suspect, is obviously it got signed. We think President Trump will be signing it. It's got to go through the technical writers. We suspect that a draft copy is going to be out probably by we think the middle of next week. We are hopeful that we're going to be taking applications by the end of next week, and that's and obviously that's a hopeful wish. But as of right now, and as things stand, we do know it's changing on an hourly basis. That's what we think as of right now.
Thank you, Jeff. Anthony, are you still on the phone?
Yes, I am.
I'd love to get your take just from getting this pushed through, what the thought was and how fast you were hoping and Congress was hoping to get these dollars out.
As soon as humanly possible is the goal, and that's why the structure is the way that it is. So, the way to think of the SBA component of this, Secretary Mnuchin said this on a call I was on last night, which I think is good framing, is the SBA component is essentially just there to provide the guarantee and to set up sort of the state of play. But we actually want people to be drawing these loans directly from their banks, going to their banks, and working with lenders that they're already familiar with. If we ran every single loan through the SBA website, as you've seen, as it's crashed multiple times in the last couple of days, I think it'd be a nightmare. So we've been told, it says a month in there, we've been told that 14 days is the internal goal. Whether they hit that or not, we'll see. But again, the goal is to get it out as quickly as possible. And then what we've heard from our local lenders here in Northeast Ohio, is they believe once the system's in place, they'll be able to turn those loans around in 1 to 3 days, and sometimes even less than 1 day, so same day. And that's obviously dependent on where you are in the country and how your banks are set up. But that's the goal. Let's get this out ASAP. It should have been out a week ago, but as quickly as possible.
Thank you. Okay, let's jump into the next question. So I guess to follow up on that, there's only a limited number of SBA bankers in the bank. Have you guys been talking internally as far as utilizing commercial bankers and other departments to push these out fast? And it sounds like that was the intent from Congress at least. So I'd like to hear what the banks are doing if they're able to, I guess, move assets around to make this happen fast. Jeff, do you want to add on to that comment?
Sure, yeah. And so to kind of give you an idea, I mean, this particular fund, this allocation of $350,000, it's like 10 times what the annual budget of the 7A program is it was this past year. So it's immense. I suspect that it's going to be all hands on deck. I think we're going to be instituting and utilizing whoever we can. I think the SBA department will kind of lead it, and then it'll be kind of our job to kind of educate the commercial lenders, the business bankers, that that's the direction that they go.
Thank you. Adam, do you have anything to add to that?
I would echo Jeff's comments. I mean, I think that it's most likely that the SBA departments inside of each bank will probably spearhead this program, but in order to effectively get the dollars out to the business owners and individuals needed, it's going to be incumbent that it's all hands on deck. So, yeah, I envision all parts of the bank will be involved in delivering these funds.
Okay, great. Thank you. So, and I guess as a follow-up to Congressman's comments, are you guys think you're structured appropriately to, once that application does get through, to fund within 1 to 3 days? Adam?
At Huntington, yeah. Absolutely. I think I know we're kind of setting the systems up as we speak, so I think we're going to be ready for it.
Okay.
And I think that the way that the legislation has been written, the politicians have done the banks a huge service by, specifically stating that there is no repayment necessary to be documented within the loan file, to the extent that you theoretically could possibly walk out with money that same day or, in a very short period of time thereafter. So I would imagine that most banks that participate in this will be able to turn it around very quickly.
Okay, great. Thank you. Dave discussed the affiliation rules at a high level, but I know this is going to be an issue with a lot of our clients that have multiple businesses or multiple locations. Ray, would you be able to discuss the practicality of how these rules are implemented at the SBA?
Sure, I can do that. So, first of all, it sounds like with some of the new legislation, there might be some relaxation of the affiliation rules. I can't really speak on that because we haven't had time to digest the new legislation and offer notices about it. But in general, affiliation, matters, especially as far as the existing program we've got, the EIDL program. Affiliation is a function of control. And if one entity has the ability to control another, or if a third entity has the ability to control both, then those two entities are considered affiliates. And the reason that's important is because we need to fit everybody who's applying for one of these loans underneath the size DIN, because obviously it is the Small Business Administration, and we're focused on small businesses unless told otherwise. So affiliation functions, it matters for an EIDL loan, and especially those entities that have private equity ownership at above a certain level or with a certain level of control over their businesses. That could be a challenge to get them underneath the applicable cap. All lenders that work with our programs are charged with making sure that small businesses that they're supporting fall under the applicable definition. And that is something that we'll be continuing to look at going forward.
Thanks, Ray. I think the next question that we've gotten a lot of internally is, what about the senior lender or the mezz lender? Are they going to need to approve a waiver of certain covenants on the loan docs? Have you guys thought about that, and how we can move quickly with that? Adam?
I mean, from the perspective of the institution that is financing the specific SBA loan, that's generally going to be outside of the purview, and I think it specifically will be outside of the purview for the loan itself that we're talking about. Whatever is in those loan agreements for the mezz or senior lender, it's probably prudent for the businesses to be communicating with those institutions as creditors, but in the specific context of the bank that's funding the SBA loan, that's outside of our concerns to the extent that I understand the legislation, given the no collateral requirements, no guarantee requirements at this point.
Thank you. This is a technical question for Ray. So construction companies usually hire specialty labor who could possibly only be employed for a few days. Would this labor count towards the 500 employee limit?
Usually we work off of full-time equivalents. So I think they would, the lender would be doing some kind of calculation based on FTEs below the threshold. Again, if you're talking about the newer programs, I would have to sort of demur on that because we haven't received the guidance. But if you're talking about the economic injury disaster loan, then that's the way I would handle it.
And Ray, the full-time equivalent under the disaster loan program is essentially is that considered 30 hours a week?
40.
Is it 40? Okay, it's 40 hours a week. Yeah. Okay. Okay, great. Here's another good question. Will the 7A loan be included in covenant calculations? I would think based on the structure and the intent that most senior lenders would waive this debt, but I'd like to hear the Adam's thoughts, and then maybe Jeff could chime in.
I think that definitely for this particular reporting year, it'll be without it'll be waived in the covenant calculations. Obviously, there's a forgivable aspect to these loans, and then anything that's not forgiven is going to be termed out over a particular period of time. So just from a credit perspective, I would believe that this year it would be waived, potentially then being included on a go-forward basis, in years 2 and 3, for example.
Yeah, I think that makes a lot of sense because if within that first year you're going to go through the period of time and request the forgiveness, so whatever remaining amount is there probably would be included on a go-forward basis in your covenant calcs, amortized over the 10-year period from the application to get forgiveness. We got a lot of nonprofits on the phone today too. Do nonprofits qualify, Ray, for the disaster loan?
Yes.
And the language that I saw in there is a private nonprofit. Do public nonprofits as well?
Right. I think that the distinction that they make is if it's sort of a quasi-governmental organization, then that would not work. And also religious organizations likely wouldn't work in that not-for-profit section. For example, a church applying would not work. But an example was given, like the YMCA could apply, and that's obviously has some sort of religious affiliation, but it's not involved with teaching religion, it's providing services. So I think that merely being associated with a religious organization doesn't necessarily rule you out, but certainly being a religious organization and teaching religion is one of the things that would preclude you. The other thing, as I mentioned, is sort of quasi-governmental organizations would not be qualified.
And Ray, that's true for the rules that are in place today for 7A as well. Is that correct?
Well, no. On a 7A, the rules are very different, and it's important for folks to remember that EIDL, the Economic Injury Disaster Loan product, and the 7A product are not the same. And one of the challenges we have is, lenders that are looking at it to try to apply, similar lessons from 7A to the EIDL program, like especially with respect to credit elsewhere and other things. They want to apply the same things, which is understandable, but they are very different programs and they have different SOPs. Under 7A, not-for-profits aren't eligible at all. Under EIDL, they are eligible. Other distinctions include landlords. Landlords are eligible to apply for EIDL, and they're not eligible at all in the 7A program, unless it's purely a pass-through entity for an operating small business. That would work in the 7A, but just someone who owns a strip mall, for example, is not going to be able to get a 7A loan. Whereas in the EIDL program, they could apply for an award based on damages because they're not getting rent. So different programs.
Got it. Thank you. And just to clarify, those are the existing rules for the 7A that Ray's talking about. So what this legislation does, just to reiterate what Dave went over earlier, is it opened it up to all businesses under 500 employees, and it also includes nonprofit entities and veteran organizations. So
yeah, thank you for that. If the new legislation has changed 7A in some way that's going to allow additional eligibility, that's great. I'm not sure whether that would apply to the general 7A program or whether it would apply to this particular
it's really just for this. Yeah, just this implementation. So to keep it separate, the normal 7A program, nonprofits, landlords wouldn't be eligible. But for the legislation that's going to be signed, hopefully today, it's opened it up to essentially everybody under 500 employees. So that's a very important distinction. Once that becomes law and the administrator gets the guidelines out, you'll be eligible as well to apply for the 2.5 times average monthly payroll. Okay, forgiveness is a big issue. What if you already laid off employees or reduced their pay? Adam, do you have any comments on that? You want me to take a stab at it?
I'll take a stab at it, and then I'm happy to hear your comments on it too. The way that I've been reading the legislation, and I think that the intentions here is that obviously businesses have had to react to the current economic environments as they saw them unfolding, up to early as a week ago, if not several weeks ago. So the way that I've understood the legislation, businesses are not going to be penalized for having laid off employees. Necessarily, it is expected that they'll be rehiring those individuals, and that's part of the test, and I'm sure part of the mechanics that'll be involved in the loan forgiveness aspect of it. And that also seems to be why the legislation is wanting for the banks, the companies, to look at the average of payroll over a 12-month period rather than, say, for example, last month's payroll if they already started to take those preventative measures. What are your thoughts there?
Yeah, I think the rehire provision really opens it up to allow for companies that have made tough decisions already to eliminate those reductions by June 30th. And if that happens, the forgiveness is still intact, which is a really good provision that we fought for to get into this law that allows companies to do what they need to do, but also still qualify for the forgiveness. We're going to lose the congressman here in about 3 or 4 minutes, so I do have one more question for you. If, what I'm hearing out there is that there's potentially a fourth stimulus package that people are discussing in Congress right now. I just wondering if you have any comments that you can go on the record and talk about today of like if and when that would happen.
Sure. So I think for just to level set, I do think we're like in the third inning, middle of the third inning or something like that with respect to where we are in the health crisis, maybe a little further ahead of it on the economic side. But so there will be more to come. My general sense is that we're going to want to see how this bill plays out for the next 2 to 3 weeks, maybe a little longer, maybe a little shorter, but we want to see how this bill ultimately translates into the economy, into the real economy, and what it does on the medical side. My guess is we're going to have to continue to put more resources in our medical infrastructure. We're going to have to get some domestic production of some very important components of fighting this virus. And so you may see some additional packages put together on that. Another area, and this may not be in the next stimulus bill, this may not be in the next package, but down the road, I think there's a lot of conversation about what do we do about business interruption insurance with respect to global pandemics. I don't believe that this is a risk that could be insured in the normal sense. I mean, if everybody filed a business interruption claim and this was covered all at the same time all over the world, I think we'd have an interesting problem on our hands. But my sense is that through the Financial Services Committee, we will be debating the best way to insure against this risk going forward. Right now, the best analog that I've seen out there is TRIA, which is terrorism risk insurance. After 9/11, this program came into place. I could see, I'm not weighing in for or against this right now, but I could see a world where we have a similar program for global pandemics. So that could be a part of it. Another part of it, the last part I would say that I think we'll address sooner rather than later, will have to do with local government finances. As part of the Fed facilities that we created, we did not create one specific to municipal bonds. And so that market is still malfunctioning a little bit. But I believe that that's something we'll do. And then also when you talk to localities or even states, they'll tell you what they've budgeted for the year. They're expecting to be off by 20 to 30% because the decrease in tax revenue. So I think you'll see some things there. All of what I just said, every single thing I just said, is all under the heading of two things. One, treating the illness and building our health capacity. And two, getting liquidity into the real economy where it has evaporated. And so that's sort of how I think of future packages, and that's the direction we'll go. Oh, and then the last piece, as I mentioned, the puzzle pieces don't fit together, so we're going to have to correct some of the flaws of this piece of legislation as well. So that's kind of how I'm thinking through the next weeks and months from a legislative standpoint. But that's all obviously subject to change at any moment.
Right. Yeah. Thank you. Well, one last question before you take off. So there's also in the bill, in the general economic relief loans for businesses with 500 to 10,000 employees. Yep. They set aside $454 billion. I think the terms are a little more onerous there as far as executive restrictions and other things. But do you have any indication of how that program is going to be rolled out?
So I agree with your first comment that the restrictions are unfortunate, to say the least. But in terms of how it's going to roll out, we don't know yet, frankly. I know that as part of it, the Fed facilities have been increased to a substantial degree, again, to provide liquidity into the corporate debt markets, both the primary and the secondary market, as well as the treasury markets. They're going to leverage those loans to increase their capacity there. So there's going to be a Fed component. In terms of the loans themselves, What I do know is they will be subject now to oversight from an inspector general and a governing body, essentially, an oversight board that'll make sure that they're being distributed appropriately. But I know Treasury is staffing that up literally as we speak and trying to articulate what the process is going to be, because there's going to be a lot of demand for that across the board. But stay tuned for that. And if you have any advice, actually, with respect to how you think that should operate, please feel free to reach out to our office, because that's kind of how we're approaching the CARES Act. Is now it shifts to implementation. We want to make sure that the rules are set correctly, that we have everything in place so that everything runs as smoothly as possible, and that'll play out over the next week or two. So stay tuned on that.
All right, we want to be respectful of your time, so thank you for jumping on today and answering our questions. So have a good day. Thank you.
Thanks, everybody.
Jeff and Adam, maybe a little add-on to that about maybe other things that your banks are doing to, other options within the bank if you are over the 500 employee limit. And waiting for this additional guidance on the General Economic Relief Loan Program. Do you have anything else that you'd like to share there?
This is Jeff. It's just the traditional avenue of going through the middle market and the commercial teams. We're going to be concentrating on the 500 and under for quite some time.
Got it.
I would. Yeah, and same thing here, Adam. The bank is actively working through its conventional measures through those commercial and middle market teams that for businesses that can't qualify, won't qualify, what have you, to take preventative measures to either increase liquidity or defer capital repayment obligations on some of the debt that's out there. So it's kind of a case-by-case basis, I guess, is the best way to put it.
Okay. And I know some of our client base, have approached your banks and others and asked for some, additional lines to get them through these times, and they've been more than willing to increase those lines. So it sounds like, for the most part, everybody's trying to do the right thing to get through this crisis. Ray, I have another question for you. If you have an existing SBA loan and they're in need of relief, what would you suggest?
Well, the agency is already encouraging lenders, including the folks that are on this call, to take active steps to defer loans for 6 months on loans that weren't sold in the secondary market, and at least 90 days for loans that were sold on the secondary market. And I think most of our lenders are taking those steps to, actively grant those deferments, which could be complete payment deferrals or interest-only payments might be taken for most affected businesses. I'd love to hear what Huntington and First National are doing on that.
Yeah, this is Jeff with Huntington. So yeah, we've been, obviously we have a huge portfolio of existing 7 loans. So we've been actively reaching out to all of them and just trying to figure out where each customer is at. We have been offering 30, 60, and 90-day full payment P&I deferrals, and most of them are taking that up. We're also, if they need additional working capital, we're looking at it internally, but we're also, having and telling the customers that they really should go straight and utilize that whole disaster relief program that's currently available. We know it's a little clunky right now. But I would encourage folks to continue to try and obtain funds that way as well.
Okay, great. So we are at our 3 o'clock point. We probably have another 500 questions we could be on all day. We will do our best to get answers out and maybe some sort of Q&A on the website. But I want to thank everybody for joining us today, and know that, I guess the final thing I'd say that we know for sure is that we're here to help, not just Cohen & Company, but First National Bank, Huntington, the SBA's local office in whatever state you're in. Everybody's here trying to get these businesses, your businesses, through this crisis and onto prosperity. So I think with that, I'd like to thank our panelists, thank the congressman, and turn this over to Stacy to give some final admin. Thank you.
Thank you, and thank you to everyone who has joined and been a part of this webinar. I would say thank you again to Congressman and our panelists, and following the webinar, we'll make some more additional information available on our website, including the recording of today's webinar as soon as possible. We look forward to having you join us in the future and hope you have a fabulous weekend. Stay safe and healthy.